Happy Sunday, everyone. It's November 14th. It's about 12:30 p.m. This video is regarding SFT. I'm going to do a little DD on it. I'm going to explain why I want to play options on it. So I don't have shares because of what happened to LOTZ. I'm going to go over play of the day also. So that's just the video. This Ultimate Traders on Reddit. Nathan from Queens. So like I said in this video, I'm going to go over DD and SFT, why it shows it as a play of the day, and why I'm not bringing runners. I'm not going to choose another runner for play of the day until we hit 10,000 subs. Now keep in mind, this is not for me. This is protect you. My goal with the play of the day is to have a safe play so everyone in the sub, everyone, not just my elite team with the generals, everyone in the sub can make money, 5 or 10%. Eventually, when we have enough subs, we will be able to do that because we love a stock and it's undervalued and it has catalysts, and that's why it should be chosen. Now with SIFT, the reason why I chose Shift SFT as a play of the day because they had over 200% growth. Okay, so the same time last year, they had $60 million in sales as a company. $60 million in sales. This is not FUD. You can look it up on Yahoo. You could look it up your brokers or on Morningstar. There's a lot of places you can look it up. So last year they had 60 million in sales. This year, the same time, they had 180 million in sales. So for this jump to go from 60 million in sales in your business to 180 million in sales in your business, which beat analyst estimates, of course, they only lost $10 million more money of more money. So whenever you want to speculate, and unfortunately, any company that's losing money, keep in mind you are speculating. Why are you speculating? If the company does not make money, doesn't have cash, how are they going to pay you to hold it? How are they going to buy shares to make it go up? So if the company is not making money, they don't have the ability to pay you to hold it or buy shares to increase costs. So any company that is losing money, we are speculators. Okay, I get that during the week. I have video about grenades. I have posts explaining grenades. It's very simple. I don't care if your company is like SNOW, which is like $120 billion. It's a speculative company, and I'm buying puts. I'm buying puts on Snow. Yes, the growth is good, but just like we're going over SFT, is the growth 200%? Who is closer to being more profitable, SFT or Snow? So going back to SFT, the reason why it was a play of the day, 200% growth, and their loss only increased by $10 million. Now, if you grow at 200%, even if you grow at 50%, the market says it's okay for you to lose money. Because why? If you keep growing sales, those sales are going to turn into profits. So another thing about it, so it grew 200% in sales to $180 million, right? That's what it did. To do that, $180 million, they only double vehicle sales from 4,000 to 8,000. So you tell me, an e-commerce online buying of the car and delivery of the car where they have someone deliver the car grew 120%. So you tell me, if they only sold 8,000 cars and had sales of $180 million, what is the likelihood they're going to sell more cars in the future from 8,000? What is the likelihood? Also, keep in mind, sales growth online grew 120%. So are they more likely to keep selling more cars? Also, no. This past quarter, they made about $2,100 per unit car sold. This is the second best quarter they've ever had. They had more profit last quarter, $2,800 per car, because the prices of used cars went up. Now, there are people on Reddit that have told me what happens, if used car sales go down. They are going to go down. I agree with you completely. But this chip shortage, you can look at Toyota, you can go to GM, you can go to Ford, all the big car makers. Okay, this is not FUD. You can Google it. You can Google it. They do not see a chip being available for at least 2 to 3 quarters. So what does that tell you? That tells you in the next 2 or 3 quarters, SFT is going to be able to gain market share. Now, of course, I'm not here to tell you that SFT is going to gain all market share and there's going to be no other place to buy used cars. But compare it to Carvana, CVNA, which is number 1, right? Number 1. Check a look at the market cap. Take a look at their growth. Who grows faster, SFT or CVNA? By the way, I did trade Carvana. I traded VRM. VRM's growth is not near SFT. Not near SFT. So going back to SFT. So 8,000 vehicles sold. Gross, they made $2,100 per unit vehicle. Now, I actually spent 2 hours reading through the 80-page 10Q. Now, this is not FUD. You can go to sec.gov, Edgar Online, and pull the 10Q. Okay, the 10Q is official. It is not FUD. It is not someone trying to spread rumors. I am not some kind of Twitter furrow that got famous in January because of AMC GameStop. A lot of these people are only trading momentum and grenades. All right, they make it seem like they're awesome because they're making money on every trade. Mind you, they don't show their losses, and a lot of them are front loading, which means they buy the stock first. They have at least 100,000 followers to 2 million followers. So if I buy a stock, if it's a rock, CEI is a rock, okay? It's $1 and it's probably heading lower. And it was almost 5 being pumped. So if I buy this rock, CEI, and tell 2 million people, hey, CEI is going to go up to $5, who's going to make money every single time? The first people that bought the stock. So that's a pump and dump. But going back, the reason why I'm saying that is because this is official. This is not some Twitter furrow that says CEI is good. He didn't look at no 10Q. He didn't look at earnings transcripts. Because if he looked at earnings transcripts, 10Q, you would be running away. In fact, I hate to say this, Ultimate Traders, we have over 5,200 subs. And I don't even think more than 50 out of 5,200 look at 10Qs. Okay? And I don't blame anyone. No one wants to spend 2 hours reading a 10Q. No one does. All right? I spent another hour reading the transcript about earnings and also listening to it. So I spent 3 hours. Now, I don't normally do that, but when I endorse a play as a play of the day and make it official, I want to make sure it is very good. Now, I did research before Friday, before making the play of the day. Thursday in the aftermarket, it was up big. Friday morning, it was up big. Okay, so my mindset is, hey, it's up nice, has heavy volume, it's a runner. Looking at these earnings, this is going to be the play of the day. Now, I was concerned because lots didn't grow at 200%, but lots grew at 130% sales, and they beat bottom line, which SIF did also. Now, LOTZ lots, I have been trading lots. I still own lots at $3.85. I didn't trade SFT yesterday. I didn't like the trade. I was writing in the daily plays that I want to wait the first 15 minutes to see what was going on. Okay, because I don't like what they did with lots. Lots destroyed. Lots was up nice and just went south. Same thing with SFT. Now going back to this this 10Q. I looked it over carefully because someone on Twitter, maybe they don't check the 10Q. Not maybe. They definitely didn't read 80 pages of the 10Q that was just out on Thursday. So they didn't read it. So they don't know what's going on. But okay, they sent me a message. And I'm never against another opinion. If you have an opinion on any play of the day, any of the stock, I want to hear it. Even if it opposes what I want. I invited at least 200 subs to Ultimate Traders from other places on Reddit. These people that I invited, a lot of them are like good traders. I've read their comments. They bring value to a sub, okay? I'm not another mod at another sub that is scared of great traders or great opinions, okay? I want the best traders. I want the best minds in my sub. I don't even care if it's a furrow on Twitter. I don't care if it's Zach Morris or Will Mead has joined my sub. I want them. I want those people to realize what I bring to the table. I want those people, the heads of Atlas Trading, the head of King Street Trading, to see what I'm playing. Because I want them to pump what I'm playing. Because my stuff has fundamentals. But back into the SE thing and back to the thing with Twitter. So on Twitter, someone was telling me the truth about SFT. He's like, cash burn is very high, which means monthly, how much money is coming out of their bank account, which is true. I responded, by the way, if you take a look at my Twitter, I responded with facts. They didn't say anything after that. So you can follow me on Twitter so you can see, but I'm going to explain it because that is true. So in the 9 months, the company is let out about $120 million of cash flow. So over the last 9 months, they've lost about $12 million per month. About $12 million. But you have to keep in mind, the company has $248 million in cash right now. They have roughly $200 million in debt. Aha! But that's why you need to look at a 10Q and not just look at the financials. If you go on Yahoo, right? If you go on Yahoo and you just take a look at this and you see, $248 million in cash. $200 million in debt. The company is in trouble. All right? That's not going to tell you all the facts. All right? I'm not saying Yahoo is wrong. I'm not saying Morningstar is wrong. I'm not saying TD or Fidelity is wrong. But it's not clearly broken down. So this person on Twitter, I appreciate. I like the feedback. But I want you guys to also take a look at the 10Q. If you see something that's what's going on. If you see something what's going on, go look at the 10Q. So now I'm going to break it down. You take a look at the 10Q. You notice $150 million of the debt, the $200 million in debt, $150 million was just borrowed in May and doesn't have to be paid back till 2026. 2026. So it's not like, ooh, I better pay it back quickly. Okay? 2026. And on top of that, even better for the company's survival, it's a convertible bond. And just so you guys know, if you want to take a look at the health of a stock, health of a company, you do not look at the stock price. The stock price does not tell you the health of the company. What tells you the health of the company is when the company goes out to borrow money and the bank or lender is taking a look at the health of the company and figuring out whether or not they can pay back the loan. Because if I'm going to loan a company $150 million, I might not care about the stock. I want to make sure I get paid. But if the stock is going to do well, I'm going to ask for a convertible bond. So the $150 million is a convertible bond at 4.75. Mind you, even Rite Aid has, and they lower their rate Rite Aid from 8% to 6.5. So that means they're going to make more money because they're spending hundreds of $1 million on interest. Okay. But you guys, and I'm sorry, this is my forum. I'm sorry for YouTube. I took a look at AMC's 10Q yesterday also when I had time. Okay. AMC has a $5.5 billion in debt. And they have so many different bonds with rates as high as 14% junk bond. Junk bond, okay? GameStop had over 10% junk bond. SFT, 4.75 and convertible. Now, with SFT, the $150 million borrowed, they got $200 million in debt, right? $90 million of the debt, that's 200, is an inventory. They never had so much inventory. So what did they do? Whenever they saw a used car at a good price, they took it. Sales is growing. So what do you think is going to happen to that debt with the floor plan? Because car dealerships work on a floor plan. Most of that debt is going to be gone in the form of sales. So that's what you need to look for when you're looking at 10Qs. So with this 4.75 bond, $150 million, interest rates are paid twice a year. Only twice a year they have to make a payment. And they're not paying principal. They're only paying interest on what is borrowed. Okay, and if $90 million of this $200 million is in floor plan, meaning your car's inventory is sold, how much are you going to pay? How much are you going to be paying? And even better, it's a convertible bond that the lender can activate around $8.40. So what does that tell us? That tells us right now the stock is $6. We are pretty safe until it hits $8.40. Not that it's going to hit $8.40, but at $8.40 or higher, that lender could, instead of using the bonds, instead of getting money back, because the company, the bank does not want money back. They want this low interest rate, keep collecting interest rates. And as SFT hits 10, they want to cash in and get shares at $8.40. They want to cash. That's the whole purpose of convertible bond. They want to cash in the shares, get the shares for $8.40, and sell it at 10 and make even more money. So we don't have a concern if we're going long until $8.40. At $8.40, $8.50, $9, now it might make sense for the bank to cash in. Okay, now the reason why I will want to do options and not buy the stock, and this is important not just for SFT, but for any stock, just like PSFE. And I'm just going to give you an example, a broad example, because a lot of people are asking about options, which is fine. I used to trade a lot of options even in the 90s. I stopped in 2017. I lost $25,000 on 50 different Tesla puts. So I bought 50 different strike prices. They might not have been different strike prices, but they're 50 different contracts. 50 different contracts with different strike prices, dates, and everything. I lost all 50 because Tesla went through the roof. So in 2017, I stopped doing options. I started doing options again. And October 1st, I decided to myself, I am just losing out on this unbelievable opportunity because retail is going crazy. And when you have so much volatility in the stock, that means your options are going to be in the money quite often. Years ago, your options did not move. Now your options are going to go crazy. Just for example, PSFE, I bought the options at 59 cents and they went as high as 90 cents. Okay, that's 50% profit in 1 hour. Now, I didn't take the 90 cents. I sold 18 of the 20 contracts at 87 cents. Okay, the stock was maybe 420, 430. That's Thursday, right? That's Thursday. Friday, the stock was higher. The stock was even higher. Maybe 455 was a high. And the option never hit over 80 cents. So options work completely different from stocks. Because on Thursday, the stock was lower and my option was worth more. On Friday, the stock went higher, but the option was lower. So, but I'm going to go into why you want to buy options on SFT or lots or a lot of these China plays. So what happens if you buy the stock? You are committing a lot of capital. Now, once again, I'm not using these three stocks. I'm just using a generalization. I'm going to give you three examples here. Okay. I buy stock X. I spend $5,000 to buy stock X. The stock goes up. I make $1,000. These are just examples. So boom, I used 5,000. I made 1,000. The stock went up. Great. I made 20%. Now let's say that you YOLO'd and buy lotto on the options. YOLO. So when you YOLO or buy lotto, that means you use a strike price that is fairly high, and the date is closer expiration. So right now, a lot of options are expiring this Friday, the 19th. So I'm going to use the 19th as example. Okay. So if your stock is 450, all right, and you buy lotto, this is this Friday, $7 or $8. Okay, and the stock goes through the roof. Instead of investing 5,000 to make 1,000, you invested 1,000 in the lottos, and you might get 1,000. Okay, but the problem with that lotto is, let's say the stock does not go up at all. And remember, it's a lotto. The due date expiration is Friday. Your chances of losing your 1,000 is very high. So I don't recommend people playing lotto. If you want to play lotto, you can double your money with less money used. Example A, example 1, this 5,000 in the stock. The stock goes up and make 1,000. You own the stock. So whatever happens, there's no date. You own the stock. You made 1,000. You bet 5,000. Option 2, you invested $1,000 in a lotto, and you could make $1,000. Option 3, which is me, because I don't YOLO. Okay. I buy something like I just did on PSFE. I used a little bit over $1,000, but instead of YOLOing, I bought April. So what happens is you pay more money to have the date out. Have the date out because it's April. Also, I picked $7 strike, which is not going to be $7. It's 4 and change. So what that means is I'm not going to make as much. So this is just an example, but I actually made more, but this is just an example. You put 1,000, all right? Because you bought a date far out, that means you pay higher premium for the date to be far out, right? And because you put a stock price that's higher, it's going to be harder to hit. It's going to be harder to hit. So you're going to put 1,000, you make 250. Now, why do I choose option 3 when I don't know what's going to go on? Option 3 is safer, less capital. Option 1, if I'm sure of the stock, you buy the stock. Why? Because the amount that you will gain will be the fastest. Let's say I would have bought PSFE, the stock, and it went from 410 to 450. I would have made the money and cashed out. But I bought the options, which Thursday were up and Friday were down. Thursday up when the stock was down, and Friday options are down when the stock is up. So buying the stock, you will always get the quickest and fastest return, but you have to put more capital. Option two, buying the YOLO, you can make the most amount of money with the small amount of money. You can actually, and I'm not gonna lie, you can actually take 1,000 and make it like 15,000, but that's rare. But I mean, there's actually an example. I'm going to give you the example. And then option 3 is a safe option where you make a small bet, so you don't invest all the money in the capital, but you know the stock is going to go up, and you pick a far out date. Because you're picking a far out date, and the price and the stock price, the strike price is higher, you're going to make a little less. But okay, I will make 250 safely and wait. Rather than option one, put $5,000, and even if I can get the money quicker, I laid out 5,000, not 1,000. Now going back to option two, okay, we spoke about, well, you know what? I don't even care if he sees this video. Zach Morris, Atlas Trading, laid back. They were pumping CEI. All right, they were pumping CEI. Now, one of the subs in here, I was actually talking to him about it when options opened on CEI. Okay. Now, mind you, at this time, when the options opened that Monday, the stock was on fire, maybe $4.20. Everyone on social media, Zach Morris created his forum on Reddit with CEI and dots. CEI had an army. Everyone was seeing CEI to $5. Everyone was seeing CEI to $5. You could look this up. I actually have screenshots saved with my conversation with this new sub. So I'm telling this new sub, you know what? I think I want to buy puts on CEI. But I told him I'm a little scared to buy puts on CEI because there's a freaking army going after it. Now, unfortunately for me, I mean, it was a small investment. CEI puts with $2 strike price for November. $2 strike. Betting that CEI, it was $4.20, remind you. And there was an army behind it. So no one was buying puts. Everyone was buying calls, which is bullish. No one was buying puts. All right. I was fearful of buying puts. I don't know why, because it was a small bet. I could have spent $1,000 and made $14,000 within 24 hours, and I'm going to explain it to you. So the puts for a $2 strike November was 20 cents each. The stock was 4 and change. The very next day, which is Tuesday, you can look it up on the calendar. The second day after options open, someone on Twitter lays out all this information on CEI to watch out for it. The stock drops from 4 and change to 80 cents. 80 cents. And I had a strike of 2. I didn't even look at the dollar strike on the puts. Why? Because there's a freaking army backing CEI, and I was not even thinking there was a possibility to hit 1. I would have made even more money. But you know what? I didn't even buy the puts at 2. But I was specifically looking at the 2 strike because I was telling this new member that, hey, if I'm going to buy puts, I'm going to buy the $2 strike on CEI. But I didn't follow through, unfortunately. So what happened is 20 cents on a Monday. The next day, when CEI was 80 cents, the put was worth $2.80. $2.80. That's 14 times your investment in a single day. Now, that doesn't normally happen. Okay, I'm not an insider. I didn't know there were going to be a short report the next day. But that's a clear example of the YOLO, the option 2. But who would have known? Because once again, CEI was going strong. Zach Morris and Atlas and all his followers, they have about 2.2 million followers. Okay, he has his group now on Reddit. They're all pumping CEI. And unfortunately, I was scared to put even $500. If I could have put $500, I would have made $7,000. Okay, that's just to give you an example, but that's because the stock dropped below the strike price. It actually dropped below $2. So once again, this video was about SFT DD. Why I chose SFT when there was actually another stock that went up 50% and the earnings weren't as good. The MRAM, that stock was up 50%, but they did do a surprise profit, but they grew at 25%, not 200%. So that's why I put SFT. That's why also I didn't buy SFT, but I was looking at buying calls. But now after reading the 10Q, reading the earnings transcript, I am going in and I'm buying calls, baby. Let's go. Be careful if you buy the stock. We don't know how long it's going to take for people to realize 200% growth, 8,000 vehicles. And mind you, on the earnings transcript, they're expecting this quarter coming with the holidays to make 1,700 per vehicle, not 2,100 per unit, because they think that spending is going to be in other Christmas stuff, other holiday stuff. So management just lowered it to 1,700, but they actually said they were being conservative. Read the earnings transcript or listen to it, because that's them being conservative. And the up guidance. So let's just say, they execute, which they've been executing. The only time that I can say that you could speculate and think that everything is going to be gravy is when the numbers are hitting. Okay, don't listen to these furrows on Twitter or even on Reddit trying to sell you the world and tell you that CI is going to take over, our DAX is going to be bigger than Facebook, bigger than WhatsApp. They're all speculating. I believe in numbers, all right? I've been trading since 1994. Show me the numbers. Don't tell me this is going to happen. Do not tell me that Tesla is going to be the only EV vehicle in the world. Okay? Do not. Show me. Show me. Do not. For me, I will not pay a stock price of a company like Tesla, but I'm not here attacking Tesla, but I'm just giving you an example, all right? So Tesla is worth more than Toyota, Ford, GM, Honda, BMW, Volkswagen, all together. Toyota sells 10 million cars a year. Are you telling me that Toyota is going out of business? Volkswagen sells 9.5 million cars a year. Same thing. Are you telling me they're not going to do EV and it's only going to be Tesla? But this is not about Tesla, okay? This is about show me the numbers, and SFT is showing me the numbers. The stock is not rewarding performance, and I expect that to change. They do have cash burn. But most of that cash burn is in a bond due in 2026. All right, have a great Sunday. If you have questions, let me know over here on YouTube, or let me know on the Ultimate Trader Forum.